Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Halley, Senior Market Analyst, Asia Pacific at OANDA. Jeff, as always, pleasure to have you on the show.
Always is, Brian. Thanks for having me.
Now, how's things in Jakarta now?
Look, life has almost returned to normal, seemingly. Cases have fallen to just a few hundred a day, and the traffic is back with a vengeance, something we all love here in Jakarta. We're running into rainy season as well. So I expect in addition to traffic, we'll get our normal annual flooding as well. So life is very much like normal at the moment, and we're all grateful for that.
Okay, so before we get your insights, let's take a quick look at how crypto markets are performing, and then take a look at how regional markets went this morning. Now, Bitcoin is at 61,523.5. It's up 1.63%. Ethereum is at 4,363. It's up 3.2%. Now, if we look at regional stock markets, we've got the Nikkei, which is at 29,486.99. It's down 0.54%. The Shanghai Composite is at 3,522.33. It's down 0.62%. The Hang Seng bucks the trend. It's up 0.75% at 25,339.33. The ASX 200 is down 0.53% at 7,331.8. The Kospi is at 3,019. It's up 1.39%. Closer to home, we've got SGX, which is at 3,221.89. It's up 0.09%. And rounding up the numbers, we've got Bursa Malaysia, which is at 1,535.97. It's down 0.33%. What's your view on the market performance this morning, Jeff?
Yeah, very much a mixed performance. Tokyo, I believe, has retreated because it rallied over 2% yesterday after the LDP victory in the elections over the weekend, which has put the fiscal stimulus program in play before the end of the year. So it's just a bit of profit taking there. Northern Asia, your Taipeis, Hong Kongs, Shanghais all seem to be, and South Korea all seem to be quite comfortable following the Nasdaq. Nasdaq's rally higher overnight, and that's very much a trend we've seen of late. Whereas the rest of ASEAN is rather more cautious, and I think markets in ASEAN have moved into a wait-and-see mode ahead of the FOMC rate decision tomorrow. Australia is down because bond yields have remained high there after a very non-committal RBA rate policy decision this morning.
Now, so given what happened this morning with the RBA, should investors take that as a signal in terms of expectations for the FOMC meeting later today?
Potentially, but I believe that a lot of central banks are running their own races at the moment. New Zealand and Canada have started tightening and have withdrawn quantitative easing. The RBA is sort of in a no man's land, refusing to withdraw all of its QE, but saying that the economy is improving and prices are going up, but at the same time letting go their yield curve control target in the 2024 bonds, which has left the markets a little confused as to what the RBA is really thinking now. I believe that tomorrow night we're going to see the FOMC announce the start of their tapering of their quantitative easing. I think the details there will be, does the Fed bring forward the potential for rate hikes into, say, 2023 or late 2022? And how aggressively do they start tapering that quantitative easing? And if it's more aggressive than expected, we'll probably see equities come under pressure, US yields rise, and the US dollar rise.
Now, across in China, state planners have said that coal prices and supply have improved. And then that's given rise to perhaps the performance this morning in Shanghai. But what's your view on the energy crisis overall globally? Has there been improvement in terms of supply and demand equilibrium?
Well, part of the reason that oil rallied was natural gas prices, and Russia has signaled, or Vladimir Putin has ordered Gazprom to start filling its European storage hubs from next week. Now, that's taken at the edge off European gas prices, which fell, I think, around 23% on Friday. That's good news for energy markets for Europe. I do believe the state planner, when they're saying that coal production has increased and prices have eased, that's good news for China. But I do think that it still is facing some energy crunches over the winter. And they're also telling their citizens today that they should be stockpiling vegetables. To me, that's not really a sign that all is good in China at the moment. So I think that China potentially and other North Asian countries and India still have energy challenges across this Northern Hemisphere winter, particularly if it's cold.
Now, looking ahead for the rest of the week, we've got a short week in parts of Asia with the public holiday on Thursday. But what should we be looking out that moves in terms of events and data points that will move the needle this week in markets? FOMC meeting, of course, being the big kahuna.
Yeah, it is. And actually, most of Asia's data is now out of the way. We had the PMIs out yesterday, the manufacturing PMIs, which actually quite pleasingly showed a pretty broad recovery right across Asia, except for Myanmar for obvious reasons. I think the next big data point that we need to be looking at, and it's been lost in the FOMC noise, is we have a US non-farm payrolls on Friday. And that's rolled around very quickly as well. So that will be the next big inflection point for markets. I'm expecting an improvement in the jobs total there. The data that we're seeing from the United States just isn't consistent with the economy adding only 300,000 jobs a month. So I believe that the risk is to the upside there very much. And again, that could see more dollar strength and perhaps a tightening of US yields.
Jeff, as always, thank you very much for sharing your insights with us.
Always a pleasure. Have a good day.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our various social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.